Hey, good afternoon. This is Trader Tim from EminiMind, and we're doing a market analysis video. Today's actually Sunday, 28th of November. Hope everyone had a nice holiday weekend and wanted to get into the ES, talk about the week ahead, and a handful of other insights that, going into the end of the year, some things that you should watch out for. One of the things that I'm really observing from this year is that kind of what's been breaking the trend is you can pretty much trade any day that the market is open that you want. Typically, for the last 10, 12 years, I would not trade the Fed meeting announcement mornings. Um, I wouldn't trade the time between Christmas and New Year's, day after Thanksgiving, even the Tuesday before the Fed meeting announcement. Typically would stay off of those days. Anytime the stock market is closed, but the futures market is open, I would stay away from those days. And this year, there have been a handful of days, this last Friday being one of them, that have kind of bucked that trend. And there have been a handful of Fed meeting days where the morning has been pretty decent. And so I think you have a lot more participants in the markets this year since COVID, at least a lot more individual traders. And collectively that does add to some of the volume and movement that we're seeing. So I don't think there's any harm in trading any day that you want to. Um, and so if you're unable to trade one week, and then the next week is a expiration week when typically things might be a little bit squirrely, just keep that in the back of your mind. But I would say go ahead and trade it as long as you're looking for very specific setups, and regardless of what the outcome is, as long as the setup is good, as long as it's a valid entry, then you shouldn't feel bad about taking a trade. Another thing to remember is that the trend can't be so clear that it's screaming at you. And what I mean by that is, just like if you were investing in a startup or some sort of early stage business, you don't know what the outcome is going to be. It's not clear what the outcome is going to be. If you were to get bullish on Apple at this point, well, it's like, okay, well, Apple, Tesla, these companies have been around a long time. Their track record is pretty clear. So when you're trading, it's important to be able to kind of take that leap of faith, identify the setup, but sometimes you have a really, really good looking trade, good looking setup that just doesn't work out. And that's perfectly okay. Another time, you might have a so-so looking setup that works out beautifully. So you don't want to micromanage your trade and start, you know, tweaking your stop and adjusting the trade as soon as you get in and say, oh, well, I had my profit target at 3 points, but it's not looking as good as I thought, so I'm going to bring it down to a point. Oh, I'm going to widen my stop. Oh, no, now I'm going to tighten my stop. Just, set your parameters, get in the trade, and then let things play out because you really never know how. I mean, there have been plenty of times where the trade comes one tick away from my stop and turns around and ends up being a winner. So we are just trading in the overnight here. Sunday market has just opened and we're getting a little bit of a lift. Um, what I'm going to be watching for this week is a move up to the halfway back short from highs to Friday's lows, and I'll look to put on some puts at that halfway back and see if we can at least get one leg lower. Um, this year especially, we have not had a strong continuation to halfway back shorts on the daily. It's just been one trades, goes down to negative 23, and then we resume to all-time highs. And where we're at in the year, we tend to get a bit of a Santa Claus rally or kind of an end-of-year rally. And so if we do get one leg lower, maybe this week, maybe there's some panic selling that comes in, which would actually be, I would welcome that for a change. But I'm not going to persist um, and chase it lower after we complete the negative 23, or at the very least just maybe hit this 50% retracement. So another couple things I wanted to mention is that, if you just think about a few weeks ago, I mentioned a video by Ray Dalio on the economic how the economy works and talking about that boom and bust cycle. And if anyone's studied any Hayek or Keynesian economics, Keynes would say spending your way out of recession when borrowing is cheap, when money's cheap, is the way to go. And so there is a lot of momentum currently around, you know, jobs, the Build Back Better plan by the U.S. government here, a lot of money being infused into the markets, and so there's a lot of this momentum. Same thing, housing market, Bitcoin, the cryptos in general. There's a lot of momentum going, and if you just go back and study history, study the economic cycle, we have these boom and bust periods to where there's growth, expansion, and then there's contraction. So it's very likely that we will have a crypto NFT bubble similar to the tech bubble in 2000. A lot of these companies are built on nothing. They're not necessarily um, delivering anything or returning any kind of profit. So some of these NFTs and a lot of these crypto companies that are out there will go bust. And just like in the tech boom, you got your Apples, your Amazons, your Microsoft. These companies will make it through. But it is one thing that will likely cause a deeper recession. And if I had to guess, I'd say maybe 3, 4 years out. But the interconnectedness of companies' balance sheets containing cryptocurrency is definitely a bit of a concern. Hedge funds owning real estate, there's a lot of interconnectedness with stocks, real estate, and crypto. And so just be conscious of that. It's totally fine to ride the wave of the tech boom, of the crypto boom, and make a whole bunch of money along the way. Just be diligent, and it's okay to take profits at times, especially when those profits are astronomical. And taking 20, 30% off of a position and being able to sleep at night and still having lots of upside potential is totally okay. If you think about, where Bitcoin has gone to 10x where we are now, that's a pretty big move, going from 55, we'll call it, up to 550,000 versus when Bitcoin was at 500 going up to 50,000. Same thing, with your Teslas, your Amazons, your Apples. And so it's okay to invest in some of these, and it's okay to take speculative plays. You just want to be, think things through. I think a lot of folks rely a little bit too much on uh, other people or the media or things to make their decisions. But when you just stop and think about it, understanding the basic economics of the boom and bust cycle, and when people have jobs and the opportunity to have jobs, then there's very little risk for an economic crash. When people don't have jobs and therefore can't pay their obligations, whether it's their mortgage, their rent, their food, now you have a much more serious risk of recession. So as we go into the end of the year, some of these patterns that we have been seeing, year in, year out, like Santa Claus rally, I would expect to see that again this year. And as we go, let's pull up the calendar real quick before we close out. We will have an expiration on the third week here in December, the 17th, and then that next week will be Christmas week. So Friday, market should be closed. Or let's see, close early, New Year's Eve, Christmas Eve and New Year's Eve. I don't know if they're closed entirely or just a half day. But once we get kind of to that week of the 20th, then in typical years past, things would slow down, but this has not been a typical year. So as long as you're trading the setups that you have laid out, you're, go ahead and trade when you're available to trade. I think if you So long as you're getting, 3, 4, 5 setup opportunities each day, then you have enough frequency in your trade setups to where if you miss a day, you're not missing out on, that one winner that's going to make you whole for the week. If you're only getting one setup a day, well, then you have to be diligent in taking every single day, trading every single day. So a good, if you're only trading the first hour or two in the morning and getting 3, 4, 5 setup opportunities, or maybe 6, 7 opportunities, that's a healthy number to where you can skip a few days and still get enough setups in a day to be able to develop good stats, and you're not just counting on that one trade to make your entire week. So if you have questions, drop them in the comments below. The masterclass will be a week from Monday, and then Tuesdays, we always do the live trading session. So you can tune in, EminiMind.com/VIP. Thanks. Have a great week.